from Yes Securities. Prayesh, good morning. What are you, what are you taking away from the earnings this time around? What's the verdict in terms of, playing off perhaps what you're seeing in the new businesses versus the core?
See, the earnings were broadly in line. If you talk about refining, they were slightly weaker than expectations. Petrochemicals slightly surprised us. And the consumer businesses, Geo and retail, were broadly in line. So I would say operationally the numbers were in line. But in terms of future growth, I would say the consumer businesses are set for a exponential growth in the near future. Retail business is doing exceedingly well. They are reporting a 50% kind of a revenue growth and a better growth in EBITDA levels. So I think the trajectory is there for a sustained up move for both retail and Geo. So I think the stock needs to be looked at in a different manner as compared to a pure hydrocarbon play some time back.
For that to happen, the earnings have to change dramatically. Geo and the retail business is accounting for about 20% of the total profit. 80% of the business is still the core business. And that business for the moment is not a business which will grow at historical run rates. So the new business will grow, but the old business is still bulk of the business. What happens during the transition period?
See, I would say that the core, if you split the core business between refining and petchem, I would say petchem is definitely under some pressure, and that would see margins coming off over the next couple of years. Possibly a bit margins in that segment might be around 18% as compared to what they have delivered, 18.5% or over that in FY19. But on the refining side, I'm quite bullish with IMO regulations coming in. I would say the GRMs could see an up move, and plus for Reliance, the petcoke gasifiers commence operation in this quarter in Q1, and that could add around $1.50 per barrel to the GRM in the current environment. So I think the refining side of the business will grow at a much healthier pace as what they had seen in FY19. So in that sense, the core business should also do well. And as you rightly mentioned, that the current contribution is less, but the kind of growth that they would be delivering in FY21, the mix would be significantly different. And so then and today we are looking at FY21, so we have to look at the stock also in a different manner today.
Right. So 1385, Prayesh, would you say that the stock is headed in for some consolidation or correction at these levels?
We are absolute buyers of Reliance even at current levels. We have a one-year price target of 1835. That's on a SOTP basis, and we would be buyers at the current levels.
All right. Thanks so much for joining us, Prayesh. Still sounding bullish there on Reliance and the way forward. That's the call coming in.